So, what other half truths did the New York Times publish in their 2023 article on long term care insurance? Well, about halfway through the article, they used this phrase savvy consumers. The entire sentence reads insurance industry officials also failed to account for the behavior of savvy consumers determined to keep their long term care insurance coverage. Insurers counted on policy lapse rates, people giving up their policies or defaulting on payment, of about 4% per year. The actual lapse rate was closer to 1%. What is the New York Times talking about? They're calling people who are determined to keep their long-term care insurance savvy. Earlier in the article, they say that these policies are wildly inadequate. How can the New York Times make both statements in the same article and say that both statements are true? How can someone be a savvy consumer keeping a wildly inadequate insurance policy? That doesn't make sense. The Times is at least half right. The private insurance market has proved wildly inadequate in providing financial security for most of the millions of older Americans because most of them don't own long-term care insurance. So instead of writing just a half truth, the New York Times article should have written the whole truth. The main problem with long-term care insurance is that not enough people have purchased the policies. That's what the New York Times should have printed.